Investing in stocks can seem overwhelming for beginners, but with the right approach, it becomes a powerful tool for building wealth. Whether you want to grow your savings, achieve financial freedom, or simply understand the market, learning how to invest wisely is crucial. In this step-by-step guide, we'll break down everything you need to know, from choosing the right stocks to minimizing risks, so you can start your investment journey with confidence and clarity. Why stock investing is your best wealth-building tool. In 2008, during the financial crisis, Michael Carter, a young software engineer from New York, saw the stock market crash. Instead of panicking, he studied investing. By 2012, he started with just $1,000 in an S&P 500 index fund. Over the next 10 years, he consistently invested $500 per month. By 2022, his portfolio had grown to over $150,000. The secret: compound growth. Unlike savings accounts, stocks allow money to grow exponentially. Many successful investors, like Warren Buffett, built their fortunes through stocks. The key is patience and consistency. Even if you start with just $50 a month, investing can transform your future. If Michael had relied only on a salary, he'd still be working paycheck to paycheck. Instead, he's now financially independent. The stock market isn't just for the rich. It's for anyone ready to take the first step. How much money do you need to start? You'll be surprised. Many believe stock investing requires thousands of dollars, but that's a myth. In 2015, Jessica Miller, a college student from Texas, had just $100 to spare. Instead of spending it, she invested in a low-cost index fund through a commission-free brokerage. Fast forward to 2023, her small monthly investments of $50 turned into $12,000. The key: starting early and staying consistent. With platforms like Robinhood, Fidelity, and Charles Schwab, beginners can invest with as little as $1. Fractional shares allow you to buy pieces of big companies like Apple, Tesla, or Amazon without breaking the bank. If you skip buying a $5 coffee daily, you could invest $150 per month, potentially growing into six figures over time. The truth is, you don't need to be rich to invest. You just need to start. The golden rule of stock investing: most beginners ignore this. In 1990, John Peterson, a teacher from California, made a common mistake. He invested all his savings in just one stock. When the dot-com crash hit in 2000, he lost 80% of his money overnight. Heartbroken, he almost gave up. Then he learned the golden rule of investing: diversification. Instead of putting all his money into one stock, he started investing in a mix of index funds, blue-chip stocks, and ETFs. By 2015, his portfolio had rebounded to over $250,000. The lesson: never bet everything on one stock. The stock market is unpredictable, but spreading your investments across different industries lowers risk. Even investing $100 per month in a broad market index fund like the S&P 500 has historically returned about 8 to 10% annually. Smart investors don't chase hype. They diversify and think long-term. Don't make John's mistake. Protect your money and let it grow wisely. How to pick winning stocks like a pro, even if you're new. In 2017, David Collins, a marketing analyst from Chicago, wanted to invest but didn't know where to start. He followed random stock tips from online forums, thinking he could make quick money. Instead, he lost $3,000 within months. Frustrated but determined, he realized he needed a real strategy. David then studied the 3 key rules of stock picking. First, he learned to invest in companies he understood. If he didn't know how a business made money, he avoided it. That's why he focused on well-known companies like Apple, Microsoft, and Coca-Cola, brands he used and trusted. Second, he checked the company's financial health, looking at revenue growth, profit margins, and debt levels. He realized that strong companies consistently generate profits and carry minimal debt. Finally, he adopted a long-term mindset. Instead of chasing hyped-up stocks promising overnight riches, he invested in businesses with real growth potential. By 2023, David's disciplined approach paid off. His portfolio grew to $75,000. His biggest lesson: avoid gambling on hot stocks. Instead, do thorough research, invest in businesses you believe in, and let time work in your favor. Avoid these costly mistakes. Save your money. In 2019, Emily Roberts, a young entrepreneur from Florida, excitedly entered the stock market. She had saved $10,000 and wanted to double her money fast. Unfortunately, she made several rookie mistakes that wiped out almost 50% of her savings within a year. Her first mistake was chasing hype stocks. She invested in companies that were trending on social media without researching their financial health. When those stocks crashed, so did her money. Second, she tried day trading without experience, thinking she could time the market. Instead of quick profits, she faced constant losses. Lastly, she ignored diversification and put all her money into just 3 stocks. When one collapsed, her entire portfolio suffered. After learning the hard way, Emily changed her approach. She started investing in index funds, diversifying her portfolio, and focusing on long-term growth. By 2023, she had recovered her losses and built a portfolio worth $18,000. The lesson? Avoid emotional investing, do your research, and stay patient. Your future wealth depends on it. How to build a portfolio that grows over time. In 2015, Brian Mitchell, an accountant from Seattle, had no idea how to create a stock portfolio. He randomly bought a few shares of big-name companies but saw little growth. Frustrated, he studied the best strategies for building a strong portfolio, and by 2023, his investments had grown to $120,000. Brian followed 3 simple steps. First, he diversified his investments. Instead of putting all his money into just a few stocks, he balanced his portfolio with blue-chip stocks, ETFs, and dividend-paying companies. This way, if one stock dropped, others would stabilize his portfolio. Second, he focused on long-term growth. He avoided market timing and consistently invested every month, whether stocks were up or down. This strategy, known as dollar-cost averaging, helped him buy shares at different prices over time. Lastly, he reinvested dividends. Many strong companies paid dividends, and by reinvesting them, his portfolio kept growing passively. Today, Brian's investments continue to grow, proving that a smart, diversified portfolio beats short-term speculation. If you want financial freedom, build your portfolio wisely, invest consistently, and let time do the work. Best apps and platforms for stock investing, beginner-friendly. In 2020, Olivia Thompson, a college graduate from Los Angeles, wanted to start investing but felt overwhelmed by complicated brokerage accounts. She didn't know where to begin until she discovered user-friendly investing apps designed for beginners. By 2024, she had built a portfolio worth $25,000 using the right platforms. The first app she used was Robinhood, known for its zero-commission trades and simple interface. It allowed her to start investing with just $1. Next, she explored Fidelity and Charles Schwab, both of which offered fractional shares, letting her invest in big companies like Amazon and Tesla without needing thousands of dollars. For automated investing, she turned to Acorns, which rounded up her everyday purchases and invested the spare change. Lastly, she used N1 Finance, which helped her build a custom portfolio with preset strategies. Each platform had different benefits, but the key takeaway: start with an app that matches your investing style. Whether you want hands-on trading or automated investing, there's a platform for everyone. Like Olivia, you don't need experience, just the right tools to begin your journey. Investing in stocks isn't just for the wealthy, it's for anyone willing to take the first step. Whether you start with $10 or $1,000, the key is consistency, patience, and smart decision-making. Avoid hype, focus on long-term growth, and use the right tools to build a strong portfolio. Just like Michael, Jessica, David, and Olivia, you can transform your financial future with small, consistent investments. The best time to start was yesterday. The second best time is today. So take action now and let your money work for you.